In the US, sustainable businesses are setting themselves up to deal with the future by nurturing strong and resilient brands that have three characteristics. They're authentic, they're responsive to consumers, and they are well integrated into a core business model. The first idea I'll explore briefly is authenticity, or the degree to which a brand is transparent and its practices can be validated. Today, a credibility gap exists with many sustainable brands. At its best, sustainable branding in the US shows a way forward that creates and delivers value for a society of consumers. At its worst, sustainable brand attempts to claim short-term value without a corresponding connection to business practices, claiming value as opposed to creating and claiming value. According to a recent study, almost 2/3 of consumers see sustainability as a marketing tool primarily. Another study in the food industry, where I do a lot of work, shows that well over 2/3 of consumers do not trust manufacturers in the US to produce healthy and safe foods. Here in the US, McDonald's, Costco, and Trader Joe's, and others at times, have been put on their heels by increasingly aggressive and sophisticated NGOs and consumers who have found substantial allegations of hypocrisy in their practices. Some of these serious enough to challenge core elements of their branding and consumer outreach strategies. To avoid this and help build trust with consumers, a sustainable brand globally, but in the US in particular, must be able to demonstrate enterprise-level business practices that support the brand story and positioning. Third-party verifications, value chain analyses, traceability, and supply chain custody frameworks must support a total accounting of systems costs and byproducts. And in several initiatives in recent years have led the way. SEDEX, the Supplier Ethical Data Exchange, and in the US soon, the Walmart Index may play a role. The second idea is consumer responsiveness, or a sustainable brand's ability to engage consumers and evolve with consumers' considerations, dynamics, and technology. For a sustainable brand in the US, engaging consumers is an ongoing relationship of mutual trust. Consider the fact that this is an often cited statistic, that over a quarter of Google's content on the world's largest 20 brands is consumer-generated. Though abundant user-generated content is a universal online trend, the scale of participation in these dialogues by US consumers is matched only in a few other countries due to the constant emergence of new technologies, degree of internet participation here in this country, and the flexible cultural norms that foment dialogue. A truly sustainable brand can manage the consumer dialogue by accounting for ever-changing commercial opportunities, stakeholder charges, and consumer concerns. The third and last dimension is what I call degree of integration, or alignment of a brand promise with a company's core business model and their strategies for growth and innovation. In the US, these business cases are increasingly centered on driving a higher willingness to pay among consumers for sustainable products. In some ways, this is an elusive but important goal of sustainable branding, since we've seen that sustainability involves accounting more fully for costs that may not be borne today by businesses or consumers. For example, end-of-product life recycling. Many of these efforts have succeeded in fattening up as opposed to leaning out a value chain and generating more economic rents along the way that can be shared by various partners, and moving away purely from the notion of green as lean.